You open your grocery app, the total jumps. Again. You blink. You know your paycheck didn't change, but somehow everything costs more. It's not your bank account. It's not even the store. It's a war you don't see. A quiet war fought in skyscraper boardrooms and digital ledgers, between central banks, the institutions that literally decide how much your money is worth. And most people, they have no idea this battle is happening, let alone that it hits their wallets every day. Here's the setup. Central banks are supposed to keep economies stable. That means controlling inflation, keeping unemployment manageable, and making sure money flows. Simple on paper, complicated in reality. Because central banks don't just act alone, they react, and they react to each other. Imagine this. The U.S. Federal Reserve raises interest rates to cool inflation. That sounds good, right? But suddenly, capital floods out of emerging markets, currencies crash, prices spike in countries halfway around the world. A central bank's decision in Washington becomes a bread crisis in Nairobi. And the math? Brutal. Every 1% shift in U.S. rates can move trillions of dollars globally. Trillions. For perspective, that's more than the combined GDP of Germany and France, and it happens quietly. No headlines scream, your coffee just got 30 cents more expensive because of New York, yet that's exactly what's happening. Central banks are also hoarding weapons most people don't understand. Bonds, liquidity swaps, currency reserves. They sound boring, but they're levers. Push the wrong button, and your mortgage, your rent, even your groceries move. And they often push those buttons, not because they want to, but because another bank did first. Here's the irony. Every time central banks hype their tools as magic solutions, the reality is usually the opposite. You hear, we're fighting inflation, while your wages barely move. You hear, markets are stable, while hidden cracks widen under your savings. The war is invisible, but the scars are everywhere. And it's not just numbers. There's timing, psychology, fear. A hint of panic in one country triggers a flinch in another, and suddenly a policy meant to protect one economy destabilizes 5 more. It's like a chess game played with trillions of dollars, except the pawns are your everyday expenses. So next time you notice prices creeping up, pause. It's not luck, it's a system. A global, high-stakes feedback loop, one that central bankers try to control and mostly fail. And the final question, the one nobody can answer. What happens if this quiet war escalates faster than anyone can react? Because unlike markets, real life doesn't pause for central banks.